What is up, you virgins? Welcome back to Trades and Gains, where we're going to break down some Google options flow ahead of their earnings next week so you can figure out if it's worth you blowing your paycheck on or not. But we're going to decode the whales and break down what really matters in the market. Today, we're diving into some butt cheeks named Google ahead of earnings, as I mentioned. And the flow is loud AF, like a white girl in a black movie theater. Options traders are split, and dark pool prints are showing big time positioning. So is smart money betting on an earnings blowout or bracing for someone who didn't take their blue chew and coming out with a flop? Let's go ahead and break this down. So let's start with the options activity. And there's a ton of it on the board, folks. So let's go ahead and check this out. Some standout flows we have. On April 16th, we had 145 calls for May with large sweep buys. Classic bullish pre-earnings setup. Now, mind you, the stock was trading at about 154. So these are people expecting maybe a little bit of downside, maybe a protective hedge. Who knows, really? We also had on April 17th, 115 calls or puts for 718.25. And there was 287,000 in premiums with 1,700 contracts with a $1.69 average. Looks like someone's feeling a little bearish over there. But one of our big notable flows is we had calls that were bought for 116.2026, and that was at the $200 strike, 1.45 million in overall premiums with a 485 average, giving them around 3,000 contracts. It looks like someone has some long-term bullishness on Google and supercomputers, maybe. Who knows? But these aren't small fish either. We're talking block and sweep orders, tight bid and ask fills, and rapid fire tape action here. Now, some key takeaways are consistent call flows are going into the 150-250 to 150 zone when we're looking at the overall flow as well. So that is something to keep your eyes peeled for. We also have higher IV, meaning implied volatility, by the way. And earnings premium is already baked in here, so you're not going to get like scalped to one way or the other. And there's very little put action in this overall flow. When we look at Google specifically for premiums, we're looking at 215 million in calls against 149 million in puts here. And that's over the last week and just over time overall. So that's one thing to keep in mind as well. Now let's flip over like a pancake and talk about some dark pool activity, and things got even spicier than a free OnlyFans page. So some of our top print zones right here, we can see that we had a $221 million print at the 154.21 level, which market open trade, cross trade, trade through exempt. This can be looked at as accumulation at these levels as well. We had 1.435 million shares traded at that level as well, folks. Now, moving on and grooving on, we also had repeat prints at the 300K share level around 150, 159, 152, 153. So it looks like between 151 and 153 seems like a big accumulation zone for the big boys to come in and start dropping their meat. Now, these weren't just random. Most of them came through during low volatility periods, aka classic stealth accumulation. They don't want to spook the markets. They don't want to spook the chart. That's smart money moving in silence. So when you see 300 million plus coming through dark pools before earnings, it's not retail. That's someone positioning big or hedging. All right, so what does all this mean exactly? Number one, the call heavy options flow says traders are positioning for upside, not hedging. The dark pool zones show a clear area of interest between 151 and 154. Institutional players are stacking size into earnings, not pulling back. So some possible scenarios here. If Google beats earning and raises guidance, expect a fast rip past 155 and probably up to 160 to 170. And if they miss, downside risk is limited down to 135 for those dark pool levels. Even down, I could even see 120 being on the board. But based on this flow, if the risk reward skew is looking very bullish heading into the print, then that's a pretty good sign for all you bulls out there. All right. So here's how I'd think about this if you're trading it. The bullish playbook, watch for early week call buying continuation. Enter near like 152 support with tight stops below 150. Look for breakouts above 155 because that's going to be your confirmation for like guidance being good and all that kind of stuff. And on the risk management side, volatility will spike into earnings. So either just play the post earnings run up or just be willing to lose whatever money you put into that position, quite frankly. And avoid chasing IV heavy out of the money calls on Monday and Tuesday this week because you will get burnt worse than a house fire victim. Sometimes the best trade is made by following the whales, not fighting them, because at the end of the day, they're the ones who will never lose money. So smart money is speaking loud and clear. Google looks locked and loaded for earnings. Will it deliver or disappoint? We'll find out soon, but the positioning is undeniable here. Drop a comment. Are you playing Google into earnings, calls, puts, or are you chilling with popcorn and watching your friends blow their portfolios? Make sure to like, subscribe, and hit the bell for more alpha on flow every single day, not week, because we ain't no bitches around here. I'll see you in the next one, and I hope you're all having a great night.